Hello, everyone. This is MOOC 8, Session 12, Digital Currencies in the Developing World. This is the last session of this MOOC. So congratulations, first of all, to everyone who has gotten to here. We've been running all fall. We've had a great set of sessions. So this is the largest version of MOOC we have ever had, well over 6,000 students, and I think the most engaged all the way through in terms of chats, videos, and so on. Here's what we're going to do today. We have a series of questions, which I'm going to try and go through. Then we will, if we have extra time, I am going to leave the floor open for whatever other questions anyone might have, beyond whether or not it has to do with this session's topic. I also would like to remind you that the final examination is coming up. It opens up from 8 p.m. Cyprus time on December 1st until 8 p.m. Cyprus time on December 4th. Duration is 2 hours. 60% is the passing grade, and you have to have attempted at least 9 of the 12 quizzes as well. And if you do both, you will have your name written into eternity with a certificate in the blockchain. So I hope as many of you as possible take the examination. With that, I am going to jump into the questions for this session, and we'll see what else we can get to. Question 1. Developing nations would require low fees. How would Bitcoin work for remittances and person-to-person fees payments, since fees are significantly higher? Would Bitcoin Cash be more ideal for such communities? Well, as a starting point, the high fees in Bitcoin have only been a relatively recent topic. So this is, through most of its existence, Bitcoin has actually had quite low fees, and certainly very low fees relative to traditional remittance providers, which for small remittances in particular can end up being a very high percentage of the amount sent. So it could be 10–20% of the amount sent for a small remittance. And of course, that's not true for all corridors. That's not true for all country pairs. It's not true for all transaction sizes. But it can be quite inefficient to send to developing countries in small amounts using traditional remittance methods. Now, Bitcoin today at times has highish fees. At times, not so high. At times, with low priority, not so high. So I wouldn't exclude the possibility that even today, under normal circumstances, without a rush transaction, that it could be transacted at a very reasonable fee. Having said that, the title of this session is not Bitcoin in the developing world, it's digital currencies in the developing world. And certainly, there are digital currencies that have low fees today. And certainly the objective of even Bitcoin Core is to have second layer solutions, layer 2 solutions, that also have low fees. So from my perspective, one of the things that I take for granted is there is almost no chance that as this ecosystem fully develops, there won't be some mechanism using a decentralized cryptocurrency that you can't send value of even a fairly small transaction with low transaction fees. Whether that means it's Bitcoin or Bitcoin Cash or Litecoin or any one of the other hundreds of altcoins or a layer 2 solution built on one of those, it could be any one of those. I believe in time, different coins or different layers of the same coin will evolve into having different usage cases. And in time, all of this is going to be irrelevant to the end user, because the end user is not going to have to think about these topics. It will be handled by software. Like in time, we will have some type of well-structured, automated wallet. That wallet will be deciding based on what we're trying to do, what is the right mechanism to send a payment, and what's the right coin to send a payment, or what's the right layer of a coin to send a payment. And it's certainly not going to be the case for the average consumer to think about how many satoshis per kilobyte a transaction is going to be, because that is hardly a user-friendly approach. It's going to be handled in software. The software is going to tell you, here are the different ways you can send it, here are the different time frames it's going to take, and here are what the cost is going to be. And I believe there will be a cost-effective solution to use some form of cryptocurrency for remittances. Remittances are one of the few existing world usage cases that I think are a pretty good fit for cryptocurrencies. Even on a non-remittance basis, I have used services that look like they're traditional banking wire services, but use crypto as an interim rail, and they work fine, and are less expensive than the traditional system is today. By the way, and this is a side note, it's not in the questions, but I think it's worth noting. People sometimes are miscalculating the cost of a transaction. A cross-border transaction has two cost components. The transaction fee to execute the transaction, which could be from the sending or the receiving bank, or both, or even sometimes an intermediary bank, but also the spread if you're swapping from one currency zone to another. The spread meaning, what is, if the exchange rate between the US dollar and the euro is 1.2 US dollars to euros, you generally cannot transact as a consumer at that price. Sorry, I'm Mr. Popular today. Phone keeps ringing. You cannot transact at $1.20 for a euro. You might go to your bank and you'll send, let's say, a $10,000 transaction. You want to send 10,000 euros to US dollars. And you might see a transaction fee that looks like, I don't know, 25 bucks. I mean, a little pricey, but not the end of the world. But then you might see that you actually conduct your trade at 1.17 or 1.18. So there's a 2% spread away from the midpoint of the currency rate. And so that means a 2% spread on $10,000 is an extra $200 in the transaction fee. So there, the transaction fee to send 10,000 euros to dollars with a 2% spread and a $25 official transaction fee is $225. Most consumers don't think about this too carefully. Most firms that are in the business of exchanging currency encourage consumers not to think about this topic too carefully. You know, if you sometimes see in airports, foreign exchange, no fee. No. Is it really no fee? Is someone paying to keep a booth in the airport and paying staff to exchange your currency, and they're doing it as a charitable endeavor? No, they're not doing it as a charitable endeavor. All that means is their fee is going to be embedded in the exchange rate or the spread of the exchange rate, what they'll actually exchange the dollars or euros for relative to the midpoint price. So you add those two things together, remittances, not just for the stereotypical, oh, I'm from the developing world and I work in the developed world and I need to send $200 home, but I am a business and I want to send $30,000 from the US to Europe or vice versa. You end up having meaningful fees implemented via the spread from the exchange rate. And so that's, I think, the correct way to think about it overall. And I think over time, you're going to get a mix. I mean, the really correct end consumer application would actually link to kind of modern banking systems as well and say, all right, here's a transaction you want to do, Antonis. You want to send $20 to the Philippines or $10,000 to Brazil or $3,000 to Sweden. It should go check a variety of payment rails and say, what is the most effective option to send this transaction? Kind of like if you're thinking to yourself, I want to send a package from Italy to Sweden, and with the post office, it's going to be €6 and take a week, and the express in the post office might be €30 and take 2 days, and FedEx will have 3 options, and DHL will have 3 options, and they'll have different prices, and you pick. And I think the overall direction of fees for moving money around the world will be downward. And it will be downward for 2 reasons. First of all, within currency zones, and the EU and the UK are ahead of the US on this, there is pressure from the regulators to reduce the fees, because otherwise the banks don't have a huge incentive to make payments faster and cheaper, because it's a nice, steady, non-risky source of fee income. And so pressure tends to come from the regulators. Across currency zones, there's much less pressure from the regulators, and this is where I think you'll have some pressure from cryptocurrencies and these new age fintech providers, something like TransferWise, that is trying to match buyers and sellers on both sides, again, to reduce the spread. So my bet is for lower fees. Maybe not lower total fee income, because once you have lower fees, you'll have more transactions happening across borders. And the more there is open, to the degree that there are open systems, even if they're not used, they'll push down the fees of the closed systems. So I think that we've covered that question fully. What are the main obstacles to the generalizations of systems like M-Pesa to the whole of Africa? This one is easy. M-Pesa is a centralized system run by the local telecom company. So for it to work in a different country that is a different telecom, first of all, that other telecom will need to want to do it and be capable of doing it. And that's true at the domestic level. And if you want it to work across countries, they have to be willing to have an agreement with M-Pesa and have the systems work across countries. And you get into all types of issues like budgets to do it and teams to do it. And what are the banking laws in that country? And if the banking laws in that country allow you to do it, or if you're effectively becoming a money transmitter in that country. And do the systems talk to each other? And if not, what are the investments needed to make the systems talk to each other? And so on and so forth. So it is the normal difficulty from getting big centralized systems to work with each other, with the additional difficulty of, in this case, that it touches upon a regulated activity, money transmission, and then there might be all types of other issues that come from the regulators. And then I would argue on top of that, you're probably going to have some competitive shuffling around where the big banks aren't necessarily going to want the telecoms to get into their business and might be pressuring to say, well, telecoms are regulated and banks are regulated, and maybe it's better if they don't mix each other up and you keep the banks over here and you keep the regulators over here. So this is what happens when you have non-permissionless systems. You have to get someone's permission, and to get someone's permission, a whole bunch of things need to happen to make them to get to a yes. Will cash still have a dominant role in most African economies and coexist with systems similar to Kenya's M-Pesa and South Africa's SnapScan rather than be fully replaced by them? Yes, I think for the foreseeable future, we are going to have still quite a few cash transactions. There is a wide spectrum. Probably the most cashless societies in the world are the Scandinavian ones. There's also a intellectual backbone and push to go cash free. The theory is it's better for tax evasion and battling illegal transactions and being more efficient and so on and so forth. And society is more open to that concept in those countries. China is rapidly moving to electronic payments, but most of the world will have cash for quite some time. And in a place like Africa, where you still have significant limitations in internet and electrical infrastructure, I don't envision cash going away anytime soon. How do you envision the future of digital wallets in developing worlds and elsewhere, where right now a lot of projects promises we'll have digital wallets holding 20 or more different interchangeable digital and fiat currencies? Yes, I think it's a great idea. I mean, this is what we should have. And it might possibly be the case that you shouldn't even have to know too much about what the mechanics of what they're using for what. Like, it should just work and it should be efficient, and how it decides in the background that this transaction should go over Litecoin or Bitcoin Cash or Bitcoin, or how it switches back and forth from one to the other. Arguably, if it works within certain parameters and it's from a trustworthy source, so you know it's behaving sensibly and not against your interests, arguably, we could get to the point of trusting that to work automatically and not even think about it. So I think we will get there. It makes sense to me that we should get there. I think we're not there now. The user interface at this stage for using digital currency, using decentralized cryptocurrencies, is still tricky and still not hugely user-friendly. But we'll get there, I think. I mean, I don't see any reason why we can't get there. Microsoft, Facebook, and Google appear to be bringing the internet to every developing country and citizen on the planet. Source: Microsoft. Do you believe this is true, since these three countries are effectively software companies? The underlying infrastructure of the internet is hardware-based, where companies like Cisco, Juniper, Huawei, and Ericsson are important players. Yeah, of course, this is true. On the whole, these three companies are not direct providers of internet access. They all have some projects along these lines, right? Like Google has Project Loon, where they're putting up balloons in the air to see if they can provision internet access to underdeveloped areas where there isn't hardline internet access. Facebook has done some projects on these lines. I don't know if Microsoft has done, but I think they might have also. But on the whole, no, they are not the underlying hardware infrastructure providers. But what they tend to be from a user perspective, they tend to be the on-ramp for a lot of users to the internet in a way that AOL was in the United States in the late 90s, right? I think there is a non-trivial number of users for whom Facebook, for all intents and purposes, is the internet. And certainly, if you look at percentage of time captured, and even more so, percentage of revenue captured in the internet, Google and Facebook have a staggering amount. I mean, it's interesting, and you can think about what this might mean for currency, but I'm going to find a link for you guys. I remember when the internet was going to be the decentralized information platform, right? And this is going to lead to all types of businesses being viable on the internet. So what's happened there? Well, it is a decentralized platform, and is much more decentralized than our prior platforms. So unlike in the past, I can go and not really ask permission from anyone, and plus or minus, subject to some constraints, publish something on the internet, and no one will stop me. And in the past, that would have been difficult for me pre the internet to have a globally accessible publishing platform. And because of this permissionlessness and this decentralization, we've had millions of websites, hundreds of thousands of applications, the whole spectrum of things you find on the internet. True, like fact check true. This is actually what has happened. If you look at it from an economic perspective, however, the internet has been a centralizing force. So if you take every industry that has migrated to the internet, it is much more centralized than it was pre-internet. Google and Facebook are effectively advertising / media companies. They have a scale and a centralization and a concentration that is literally unheard of in the offline world. Any publisher in the offline world couldn't in their wildest dreams imagine capturing 30% of the advertising market, having 1 billion plus users, right? And yet this is kind of the ranges that each of them live in. I don't remember what it is recently, but ballpark, I think to myself that kind of internet advertising is a third Google and a third Facebook and a third everyone else on the planet, which is crazy, right? Like it's super centralized. You're seeing it with e-commerce. Amazon has a very significant share of e-commerce and will, I suspect, continue to grow their share of e-commerce in the United States. And the reason is, of course, that the flip side of there's no barriers to entry to me putting my business online or my publication online, there's also no barriers to entry to a good central player to getting an incremental customer. And so if you were, go take media, right? If you had newspapers, there was a good and a bad part. The good part, you were the local newspaper in Albany, you printed newspapers in Albany, you took them to people's front porch and you put them on their front porch. It was pretty hard for someone else to come into Albany and compete with you. You had a local monopoly for news in Albany. On the other hand, just like it's hard for someone to compete with you, it's pretty hard for you to go and compete with someone else. So hard for the top paper in Albany to also become the top paper in Phoenix, let alone the top paper in Zimbabwe. I mean, totally impossible. Well, here, if Google is a little bit better than Yahoo or Bing, there's no geographic barrier to the next user coming on Google, and the next user coming on Google, and the next user coming on Google. And so where you end up is Google starts taking, in some countries, over 90% market share of search, right? Facebook has basically, X some countries where it's been blocked, a global monopoly on social networking. Amazon, with some combination of their reach and their focus on prices and trying to bundle products, has made it can go into multiple markets simultaneously. And so one of the interesting questions, and I'm posting a link for Andreas to post to you guys, there's an excellent book called The Master Switch, The Rise and Fall of Information Empires. And kind of the theme to this book, and Andreas will post the link to Amazon. Ironically enough, the Amazon link says every time there's a new information distribution mechanism, it starts off being much more decentralized, than the existing system. And everyone thinks, wow, great, this is going to be the Wild West, and we're going to decentralize, and everyone's going to get the opportunity to participate, and we will have hundreds of cable companies across the United States. Like cable used to be literally a Wild West. Like every little town would make their own little cable system. And over time, what happens is they tend to consolidate. And the new exciting decentralized system becomes a centralized system. And then a new technology comes up, and the pattern repeats itself. And so it's very interesting. If you have a chance to read this book, I highly recommend it. It's a little dense. It's a little, it's kind of the history of media. But you see this pattern emerging over and over again. And you see patterns that we think are new to us, but are not really new to us. Like they've happened before. They happened with cable. They happened with TV. They happened with internet. And the pattern tends to be decentralization at first and then re-centralization. And so it's interesting to think what that might mean in this space, because we're certainly in the phase, and I certainly believe it, that blockchain-based systems allow us to have much more decentralized systems. But it's interesting to think that people have thought this before and ended up with centralized systems at the end. Let me knock that one off. India has been pushing for a cashless society. The political issue, yes. Can I give you a funny side note? The day they did the surprise demonetization, where they basically declared all cash above, I don't know, a couple bucks unusable, I was flying to India that very day. And so I couldn't actually exchange any money for cash. And it was actually extremely annoying. And I was lucky that I was like, well, how am I going to get around? And so I was booking cars from my hotel, which was irritating because they were quite expensive. And then I figured out Uber was still working fine. So I started Ubering throughout the day. But I literally couldn't get my hands on cash to pay taxis or tuk-tuks. And that was a weird feeling. And the idea of the demonetization was that they were going to capture a lot of illegal money, black money that had been generated through tax evasion or bribery or what have you. And the results were not, I think, what they expected, to be honest. Like, if you look, there's been some analysis done recently of the cost of the demonetization, including making everyone's life super annoying for a few weeks, and how much incremental tax revenue was collected or fines were collected. It was nowhere near the initial expectations. And it's interesting to think what that might mean. It might mean that, well, maybe there wasn't that much black money to begin with, though I doubt that's the scenario. What it probably means is that people are inventive. And all systems get gamed. And when you said these are the rules by which you can get your money, your cash back into the financial system, people found ways around the rules. So, for example, you could not accept cash for a transaction after a certain date. But people come and say, well, I'm going to go buy this piece of jewelry, but I want to put backdated receipt. And well, the guy says, well, I don't know what I'm going to do with the cash, but at some certain premium, they would get the backdated receipt. Or each individual could only deposit this much, no question asked. So I'm guessing some things that happened is money was spread around friends and relatives and deposited that way. Now, it's obviously can't account for all of it or most of it, but all systems, every time you set up incentives for humans, you should consider the possibility, because it will happen that they will get gamed. I mean, that's what humans do. So it was an interesting experiment, very bold. I've never seen anything like it. Like they demonetized, they decashed the largest country in the world overnight, and like, I don't know, 10 people knew about it before they launched their move, and I don't think it quite had the results they had hoped for. Anyways, the rest of this question says, the political issue of Bitcoin and digital currencies remains contentious, but adoption appears to work in some layers of society. Isn't that pattern likely to be reproduced only in developing but developed economies as well? Yeah, money tends to be a contentious issue in general, right? Like, because it is the ultimate mechanism by which modern societies grant access to resources, which resource is just a fancy word for everything. Like everything a human might want is intermediated with money, for the most part. The love of your family, and your philosophical leanings aside, like all your material needs tend to be intermediated by money. And so discussions about money are always contentious. Going on the gold standard, contentious. Coming off the gold standard, contentious. Having fixed exchange rates, contentious. Having floating exchange rates, contentious. Having deficits that may or may not be caused by incorrect exchange rates, contentious. So, to the degree that cryptocurrencies become a major store of economic value and or currency-like instruments, it's going to be contentious. The only version where it won't be contentious is if they don't work at all, and I think we've passed that point. So I don't think this is something that is specifically anti-cryptocurrency. Anytime you're moving billions of dollars of value around and among people, people get uncomfortable. They want to exert control. They want to implement their own political leanings via the monetary system. And so it's inevitable it's going to be contentious. You know, people don't think about this, but there really is no right or wrong on monetary policy, right? It's a decision about values ultimately, right? Like if you have, and let's leave extreme examples aside. I'm not talking about hyperinflation or hyperdeflation. The difference between small inflation, small deflation, medium inflation, it helps some people and it hurts some other people, right? So deflation helps creditors and hurts borrowers. Inflation helps borrowers and producers and hurts creditors and hurts consumers a little bit. Like, so there is, anytime these move in one direction or the other, there are winners and losers. There's no absolute good, right? There's no absolute, again, leaving aside poor, just actively poor economic decisions. Nobody's going to argue that very high inflation is good, right? But within the parameters of most sensible monetary policy, for every winner, there is an equivalent loser and vice versa. And so money, yes, there's all the things we said in the beginning, right? It's a store of value and a medium of exchange. I mean, it's also an expression of values. And it's an expression of, and the ability to move money around, create money, destroy money, allows people to governments or people through their governments to express policy preferences. And you may or may not agree with the policy preferences, but they clearly exist. And so when this basically comes down to this is one of the main mechanisms by which we create our societies, you can imagine there will be massive interest in the topic and massive arguments about it and contention, as we call it, and people will be wanting to express their interests or values. And so I think it is to be expected. There's a question here that I'm going to go through quickly. Have you heard about human IQ, an interface with face recognition? I'm afraid I have not heard about it, so I'm going to skip this question. If Andreas does know about it and wants to mention something in the comments, I will let him do so. Should countries from developing world expect store goods to have price tags and digital currencies anytime soon? No, I would not expect that. I would not expect that in most countries, a cryptocurrency would become the unit of account in the immediate future. In most countries. People might, in very extreme scenarios, the type of hyperinflation we're seeing in Venezuela and Zimbabwe, you can absolutely imagine a cryptocurrency becoming a store of value or a medium of exchange or just a way to transact in a somewhat normal manner, that even with the volatility that exists today in cryptocurrencies, they are less volatile, and the Venezuelan bolivar, and the Venezuelan is not just volatile, it's just going in one direction, right? Like, I mean, we talk about volatility as if it is a completely neutral term, but it does make sense which direction the volatility is going, right? Like, the Venezuelan bolivar has a lot of volatility, and that's because its price is collapsing over and over and over again. And so what used to happen in these types of cases is what they call dollarization. So a country in many cases, informally or formally, starts working with a more stable unit of account. In the formal cases, because the government actually wants it and says, fine, we're going to give up our rights to have monetary policy, which means we're basically going to give up our rights to spend more than we take in and can borrow as the government. So it has an impact on fiscal policy. And we'll just use the dollar because it's better for the economy, it's more stable, and so on. And that happens sometimes formally. It sometimes happens informally, that people will just want to accept dollars. And then countries that are against this will ban it. And is where you're seeing interesting situations. Like, there's a non-trivial amount of Bitcoin mining starting to happen in Venezuela as a way to get Bitcoin into the country. And then there's also people who have been arrested for Bitcoin mining in Venezuela. And so these are tricky questions, but there's some market data. I think a couple of days ago, Bitcoin in Zimbabwe was trading for the equivalent of $13,500. Right? So it's obviously at a high premium in Zimbabwe. People would be willing to spend almost 60% more than they would in the United States to get their hands on some Bitcoin. And of course, the reason there's a high premium is nobody wants to take the other side of the transaction. Right? Like, you'd have to take on money in Zimbabwe in order to give someone their Bitcoin. And so no one's really into, you have to pay a very high premium to get your hands on Bitcoin in Zimbabwe. So be interesting to see if we reach a point where some economy does effectively take on a cryptocurrency unit of account, but I think we're a ways we're a ways away from that stuff. Related to this, many developing countries are taking a hostile approach to Bitcoin, like Zimbabwe. Sometimes the countries that can benefit most might be the ones that try and prevent its use. In some cases, the population just ignores the rule. What do you think? Look, if Zimbabwe was running a logical, sensible monetary policy, it wouldn't have the problems it has already. So almost by definition, a country that is having some type of economic collapse like a Zimbabwe or Venezuela are having, it's not because they're making sensible and logical, wise policy decisions. So I wouldn't necessarily expect them to then be the world leaders in sensible, open-minded regulation of cryptocurrency. More or less the last thing I would expect of them. So, I mean, this is true and also unsurprising. And last one of these existing questions, as long as there's electricity and the internet, Bitcoin and blockchain technology will continue to populate the world. I guess that's not a question, that is a statement of positive optimism. And will the world adoption be faster than we ever imagined? Which is, I think, a statement of positive optimism phrased as a question. I don't know, I'm guessing there's a extremely wide range of opinions across the world community about how fast adoption will exactly be. So whether it's going to be faster than we imagine is a difficult question, but I think there's people who think it's going to be amazing and be everywhere, and people who think that it's not going to go anywhere at all. Generally with technology, I'll keep this conceptual. I like Bill Gates' statement, which is most people overestimate what they can do in 1 year and underestimate what they can do in a decade. And I think that is a very, very, very valuable insight. I think a lot of people start things expecting not instant, but quick results, and then get discouraged if they don't get them. On the other hand, if you start working on something and put yourself down, and you're making progress, and that progress is cumulative, so what you do in day 2 builds on day 1, and month 2 builds on 1 month, and year 2 builds on year 1, eventually you get the equivalent of the compounding effect, like with a loan or bank account or asset returns, building on your efforts, and suddenly you end up in a really amazing place, as he says, a decade later. So I find it is generally impractical to worry too much about exact adoption rates for this in this context or another context. I think it depends much more specifically on the application that you're thinking of and the context that you're thinking of it, and if it makes sense in that context. And if it does, that's great. And if it doesn't, it's not necessarily going to help you if something else is getting adopted. I'll finish this part with one personal anecdote. I once started a company called videopublishing.com, which was one of the earlier video streaming platforms, which was, you could, as a company, adopt it and upload your videos, transcode them, stream them, do analytics on them, real time and on demand. And we were one of the earlier users of Amazon Web Services. We were the first to stream the UN General Assembly live. At some point it was on the homepage of MSN. And the reason I founded this business is I correctly said, oh, video on the internet is going to be big. And was that assumption correct? Yes, video on the internet did in fact become very big. But the vast majority of video on the internet ended up being YouTube and Netflix. And even though many, in fact, 70 to 80 firms eventually launched with this similar idea as videopublishing.com, a couple did okay, not great, and most of them didn't go anywhere at all. So macro trends don't, I mean, of course, you should think about them. You shouldn't probably get into the fax machine business today, but they are less helpful than you might think about in terms of guiding your actual actions. Because I've done this, I've had the exact experience of being perfectly correct in the macro trend, and that being perfectly useless to any of my micro actions. So eventually you get some humility, I think, about being able to predict macro trends, and let alone the second and third order implications of macro trends, which is probably what you're actually interested in, right? Because like, usually when people say, do you think this thing's going to happen? What's in the back of their minds is, therefore this will make this business opportunity, or therefore this thing will become more valuable, or therefore I'll be able to do this other thing. And there it gets really complicated when you think of second and third order implications. So anyway, that's the official questions here. I wanted to leave you guys, I want to share one framework to think about that I described for the first time at the Decentralized conference. And I found it to be helpful. I had never said it this way before, and I thought it was helpful. Every one of us has a bundle of societal rights. Think about this, right? So what do I mean? I have the right to go live in a certain apartment that I'm renting from the owner, but I don't have the right to sell it. Or I have the right to go into this house that I own, and if I want to knock down the walls, or subject to planning and zoning approvals, and sell it or lease it or what have you. Or I might have the right to go to the Marriott and go into this room, but for 24 hours only. Or I might have the right to vote in a municipal election in Kansas. Or I might have the right to go to Bank of America and request my demand deposit of $200 being given back to me. All right, so our lives are our role in society, or our boundaries in society, are defined by a variety of political, economic, and social rights. Today, more or less all of those rights are intermediated via centralized record keeper, ledger keeper, trusted third party, whatever you want to call it. Right? The Marriott, how you get into your room at Marriott, you go to the front desk and they pull up the reservation system. Why the ATM at Bank of America will let me have $100 is because it checked their centralized system. If I'm allowed to vote in the municipal elections in Topeka, Kansas, someone's going to check a centralized voter roll, and so on and so on. What blockchains at the most abstract level are a way to intermediate those rights, grant them, share them, trade them, etc., without someone being in charge in a decentralized manner. And then when you think about it that way, that's a pretty big deal, all right? A pretty big deal, right? Because there's a lot of things that are handled in a centralized manner. I mean, everything. The whole structure of how we go through our day is based on this. And so here, we're at day one in thinking about how this could be done differently, how a society could be organized with decentralized networks of rights. Doesn't mean it's all going to be all good, by the way. I mean, it could be bad versions of this. But overall, I suspect it is a plus for human freedom. Overall, I think it's generally a better thing when some form of human rights become more decentralized. And I think that's what, hopefully, as my wish is we'll see with blockchains. So I wanted to leave you that thought. It's kind of highly conceptual, but I find it helpful. So we have 5 minutes left. Andreas told me I need to tell you that in order to access the examination, you have to go through the post-course survey, which that sounds like a very good idea, and that'll be very helpful to us. We 100,000% read those after the end of every MOOC, and they give us ideas. They help us make it better for the next time. They help us make adjustments. So please go through that survey and let us know. I think it's some demographics and then some things what you like and didn't like in the course. So that's a very helpful thing. Would also mention we have our next intake of the Masters of Science in Digital Currency coming up in January. So if you enjoyed this course, if you would like to get deeper into this topic, please speak with Andreas or speak with Irini, and let's see if this is something that makes sense for you. We also have, like I said, I'm very, very popular today. And we also have some professional certificates that are for people who can't do the whole master's program. So the master's program is 9 classes, 90 ECTS is the European Credit Transfer System. You've taken one of the 9 courses if you complete this MOOC and complete the examination and so on. You will be given credit for the first course. And then the other 8 is what leads to the master's degree. The professional certificates are each 3 courses, and they are obviously shorter, and for people who would like to learn more, would like to get a certification, but don't necessarily want to go through the whole master's. So we'd love to see you in either one of those. It's a great group in the master's program, and obviously the class sizes are much, much smaller in the master's program, and so in those classes they tend to be even more interactive than here in the MOOC. We actually get everyone lined up on video and we chat with each other about different topics. So someone really wants to get a hold of me. And then beyond that, we will be announcing the new Decentralized 2018 in a couple weeks. It's our conference where we all get together as a community. We'd love for you guys to be there. And in January, we'll be announcing the Decentralized Network, which is a mechanism by which all of us together can continue to work on different topics as a community outside of the context of the course. So you're going to be getting an email about that in a few weeks. Please sign up. It doesn't cost anything. We are going to have, I think, a job board there. We're going to have an area to look for different research projects. We'll have an area to organize meetups. So I think it's going to be great. Give people a chance to work together on these topics around the world, and we'll just play some type of coordinating role to help everyone. So we would keep an eye out for that email, and please sign up. It's going to be, I think, super interesting. So with that, I am going to close off this session. Thank you all so much for joining. This is super fun for me. It's super fun for all of us. We learn a lot every time we teach the course. And if you have friends, relatives, family who are interested in MOOC 9, we will be right back here after the holidays, ready to go again. So have a great weekend, everyone. For those in the States, hope you had a great Thanksgiving yesterday. Please, all of you, take your final. And for everyone celebrating different holidays through December, I hope you have a wonderful holiday season and a very happy new year next year. Thank you very much, everyone.